question box that was over here or that you gave out at our resource table, and the answers that we've been able to put together. Without Shannon, we relied pretty heavily on the resource table and on Jeff to help with this, but this is not their forte. They're very, very knowledgeable, but this is not where they spend a lot of their time doing this kind of stuff, and so we worked really hard on them, but I'm going to go take these back to the office and do some further refinement on them. So when you see them in the bulletin, there may be some additional, we'll get the codes in, get that kind of stuff there. So I'm trying to hit as many as we can just to give you some general information on them. There were a few things before we start the questions. There were some comments that came in, a couple of complaints. I'm not putting the complaints in the bulletin, just so you know, but I'll tell you about them now. The first one, and I think is kind of twofold, and it's about the PowerPoint presentations, and I understand, and they kind of go together, that we didn't always have the correct PowerPoint presentation for you, and some of them we didn't have in time to get out there for you to get them printed off before you got here. We do the best we can on this, and I can't guarantee a 100% improvement. We work really hard to get the presenters. We give them 2 or 3 reminders that we need their presentations by a certain time in order to get them posted, but they're very gracious enough to give us their time to come and present, and we're not going to tell them, you don't give us a presentation, you're not presenting. So we take what we can get, and we're thankful for that. So there are going to be times when we don't have them. We will get them at least on that day and get them posted. So anything that needed to be corrected or wasn't on there will be there. Hopefully next week we'll get Tyler to get those added to our website. That's another thing. I couldn't put that on the website if you held a gun to my head. I got to get somebody else to do it who knows how to do it. So there's a process through this that does take a little bit of time, but we are aware of that problem, and we will work on getting that as corrected as we can. And then there was a longer one, and I'll just address the bottom part of it on problems on inconsistencies between what we read in the bulletin or memos from state officials versus what we are told by the field examiners or the people auditing us. Yes, we all need to be on the same page. There's no question about that. We have a lot of, and there's a question that we're going to be answering that too. We have a lot of new field examiners we're trying to get up in training. There's a different set of rules for, as you know, for counties versus a city or a town versus a township versus a school versus a conservancy district. They have to learn all of those. And so it takes some time for them to understand, and sometimes they carry over things that from a city or town that doesn't apply to a county, but they think it does. The hierarchy that is out there is the manuals and the bulletins are our uniform guidelines. If it says something, that's what you follow. So if your FE is saying something that is contradictory to a bulletin article or to a directive from the state examiner or to something in the manual, bear in mind we do have to update the manual, so there's a little caveat there. But or the statute itself, you can point that out to them. If you have issues with that, contact the office. We'll be glad to discuss it. To try to get that clarified, but you know, those are what you are supposed to be following as far as uniform compliance and the statutes as far as the laws, compliance with the laws. So if you have it in writing from one of those sources, even if someone tells you it different, doesn't mean that it is. So call me, call Shannon on those kind of questions. We'll be glad to address them and to work with the field on that. Jeff over here and Bill and Susan that were at our resource table, and Karen, although she's retiring, these are our audit coordinators. They got pulled for this job because everybody's in that training this week. And they kind of coordinate our, they actually coordinate our audit teams and try to keep them going and try to get them trained and get them up and running. And so they all saw these same things. They're aware of that as well. So, you know, we are working on getting people trained, getting things more consistent. So if you have questions or you feel like you're getting contradictory information, just give us a call. Okay, on to the questions. How do you close out old grant funds? If you have a grant fund, and it's going to be even more difficult if you're coming in and you didn't even establish this fund, it's been on your ledger for a while. What we advise you as a first step is try to figure out what the grant was intended for. You might have to go back to your EMA director. If they know, you might have to go to your health department. You might have to go to your sheriff department and find out what the grant was for. If it's available and there are any, the grant agreement is still around, you can check that for closeout procedures. You can also contact the granting agency to see if they have directives on what should happen. As Kathy explained earlier on the, like the community crossings, which is a state grant, if you don't use all of your grant, sometimes they require you to send that back, the portion that was not used back. So there are a lot of things you got to go through. If you get down to it and you cannot, you've gone through these steps and you cannot determine what it was or what it was intended to do, or if you don't even know what department got it, I hope that doesn't happen. The very basic thing, especially if it's a small amount, is consider it a dormant fund, and you can close it out to your general fund or rainy day fund. But you need to go through the procedures first to make sure that you're doing the best. If you know it's for a particular department and you can use it in line with what the original intent was for, that's even better. So check with your department heads if it's their grant and see if you can get some information on it. Our probation department would like to collect their own alcohol and drug fees instead of the clerk's office collecting them. Is this recommended, or would there be better cash handling controls by keeping it within the clerk's office? Okay, we went to the statute, which is the first place we're going to check, in Indiana Code, and I'll put all of this in the bulletin, 12-23-14. It does state that the Alcohol and Drug Services Program, which in this case is run by the probation department, or the clerk of the court shall collect the fees. So we're not going to take audit exception who's collecting them. The other part of the question is controls. You need to have controls in place to make sure that all of what's being collected is being remitted properly. And so if you have a department that, hopefully your probation doesn't, but if you have a department that's not used to collecting money and does not have a lot of controls in place, you might want to work with them. If they don't want to mess with it and the clerk's office wants to collect it, that's fine too, because they usually have those controls in place to make sure that they're properly recorded, receipts are being given out, deposits are being made regularly. All of those controls have to be in place with whoever is collecting that. And then remember, if you have a department employee that's collecting money, they have to at least be bonded up to the $5,000. Whoops, I forgot the question. When a business is requesting a change in liquor license, is the county surveyor required to sign? Yes, our resource table found there was a county verification of business location. It's State Form 44184 that is to be signed by the county surveyor. If the county does not have a surveyor, then the county should contact the Alcohol and Tobacco Commission for guidance. Is the Community Crossings grant on a calendar year or fiscal year? All of your state grants are going to be appropriated on a fiscal year of July 1st through June 30th, because that's the state's fiscal year. That's how all of their departments operate. You're always going to budget on a calendar year, and I realize that causes problems. I think with the community crossings, you actually have less problems because you're going to budget it by project. So it should be a little bit easier to set up that appropriation for the year based on what projects you want to get done. On Tuesday, someone said that the auditor is treasurer of the Redevelopment Commission. That somebody was probably me. Is there a statute that defines this duty? Yes, in Indiana Code 36-7-14-8 and 36-714 is the Redevelopment Commission statute. But in Section 8 of that statute, it states that the fiscal officer of the unit establishing a redevelopment commission is the treasurer of the Redevelopment Commission. And I'm not going to read the rest of it, although we have it here. I'll put it in the bulletin. I think it was on one of the slides that we did for TIF as well. Our highway department has petty cash. If the superintendent or any highway employee has travel expenses for a meeting or conference, they take it out of petty cash. Should it be done this way, or should they submit a claim for personal reimbursement through the normal claims process? They should be following the travel policy the same as every other employee of your county. So if your policy is they pay and get reimbursement, they should not be using the petty cash fund for that. The petty cash fund is not a way to get around the accounts payable system or your travel policy or anything else. It's established because your department might have some small or emergency things. You know, they need to buy some parts over a weekend when the auditor's office isn't open. They might have mail come in with postage due. I don't know how often that happens. And that's what the petty cash is supposed to handle. And then you turn the claims in and get reimbursement for that. So really, they should be informed that that is not an appropriate use of the travel expenses. I know that we probably would not take exception if once in a while we found like a parking, they went to a meeting and had to pay parking and they paid it out of petty cash. We're probably not going to take exception to that. But as a policy, they should be following the county's policy on travel. And if you want to look at what the statute says on petty cash, it's in Indiana Code 36-1-8-3. And in subsection B, the custodian of the petty cash fund shall use it to pay small or emergency items of operating expense. Last November, an email came out saying counties could not accept dinners from firms who do federal projects. Is there a way to get around this? What if we pass an ordinance? Does this apply to golf outings where an engineering firm who does federal projects sponsors a team of county officials? Okay. I'm not sure who the memo came from. I'm guessing probably NDOT, but I don't know for sure. And I think what they're referring to is the new Uniform Compliance Guidelines for federal programs. So this is a federal law, not a state law. And you will find this, and I will put it in the bulletin, in 2 CFR 200.318 on procurement standards. And you're supposed to have a procurement policy that includes a lot of this information. Let me get to the part. So it says in that code, no employee, officer, or agent may participate in the selection, award, or administration of a contract supported by a federal award if he or she has a real or apparent conflict of interest. Such a conflict of interest would arise when the employee, officer, or agent, any member of his or her immediate family, his or her partner, or an organization which employs or is about to employ any of the parties, has a financial other interest in a tangible personal benefit from a firm considered for a contract. The officers, employees, and agents of the non-federal entity, which would be the county in this case, may neither solicit nor accept gratuities, favors, or anything of monetary value from contractors or parties to subcontracts. Okay. So while we can't give you any guidance on getting around the federal requirement, it's really you need to set your standards, you need to set your procurement policy for that. You run the risk if you accept some of these gifts. I would check with your grantor agency if it's passing through one of the state departments, NDOT, or someone else, how they feel about this, but it can affect your federal funding. It's where you're going to have an issue with that. So it's something you need to be considering for ongoing, and this is under the new Uniform Compliance Guidelines. Our extension office has speakers, volunteers, and judges for events and projects. They buy gift bags, tissue paper for these people. I guess they have a gift they put in the bag. And can the gift bag and tissue come from the county general? If your extension office, there should be a contract between the county and the extension office laying out what you will be paying or providing for your extension officer. And some of it's, it's with Purdue, and some of it's, they have a contract then with Purdue as well. So you have to do in compliance with whatever that contract is. On a general note, we are not going to take exception to purchases if there is a business reason related to them. So if it looks like a personal expense and it gets pulled during a claims audit and we pull it and look at it, we're going to be asking you, what is the documentation? We're going to be asking the extension office, what is their documentation to show this had a business purpose? And if it does have a business purpose, we may not take exception, we wouldn't take exception to it. If they cannot provide that, then there could be an issue. Are county auditors required to split a tax bill if requested for multiple owners on one parcel? I believe this is a courtesy that many of your auditors' offices are doing, but there is no requirement in statute or the Uniform Compliance for you to do this. You are required, and I'm not going to read everything they have here, but you are required to prepare that tax duplicate and figure out what that tax bill is for that parcel. If they convey ownership, where they split a parcel among owners, you know, the next assessment you're going to be doing that on those various parcels, but there's nothing that says you have to sit down with them and figure out an equitable way for these joint owners to pay this tax bill. They really need to do it themselves. If you want to do it, you can, but there's nothing in statute that says you have to. The manual states that an inventory should be performed every 2 years. What dollar amount do you recommend for the threshold on this? I am not referring to fixed asset threshold, but inventory threshold. Okay, to try to explain the difference, on your capital assets, you should have a capitalization policy, and that is going to have a threshold for what assets you are going to capitalize. For land, it's usually set at 0. For buildings or equipment, it might be 5,000. Whatever your county sets up, you determine that. And that is your threshold for capitalization. If the purchase is above that, then you need to capitalize it, get it added to your detailed list of capital assets. And the manual for saying an inventory, we're talking about every 2 years, you actually need to do a physical inventory or have your departments do a physical inventory and make sure that that detailed list is still accurate. As you are probably aware, they don't always tell you when they trade off or get rid of or sell, especially equipment. So you may be holding on, you may have things on that list that they said, oh, I haven't had that for 4 or 5 years. That's what the inventory is supposed to do. Make them be accountable for that and get back to you what actually should be on that threshold. There is usually a lot of places, especially for these highly convertible items. If you're buying laptops and maybe they're a couple $1,000s, so they're below your threshold, but they're very easily taken, misappropriated, turn up missing, you can do an inventory of those as an internal control procedure, and that's it's certainly highly recommended that you do that. So those don't turn up missing. There is an inventory of that. That is separate from your capitalization or your capital assets, but it's just a separate inventory that you keep as part of your internal controls. Does that make sense, the difference between the two? But what we're focusing on as far as what's in the manual is the inventory of your capital assets off of your detail list. Are we to include the sheriff's cash book and the recorder's cash book on the annual report? The short answer to that is no, and it is confusing because when we originally did the supplemental reports and the annual financial report, we did include those, and we actually have funds on the funds ledger that show those as supplemental reports. But we later determined that and amended that if the money that is still on there in December is going to be receipted into the county, it does not need to be included. So that's why the commissary fund needs to be on the inmate trust, because that's never going to come into the county records. Your clerk's trust account or the ISETs, that's never going to come in. So those kind of funds are the ones that need to be added to your annual report. If it's just a matter that they haven't receipted everything in by the end of December, that does not need to be, unless you're doing a GAAP report. Make that caveat. Is there a fund already created in the county chart of accounts for the Community Crossings grant? No, it's a state grant, so it goes in the series 9100 to 9199. Whatever you haven't already used, you can use that, but that's within that series, the county decides which fund they're going to use on that. When moving funds or transferring from one fund to another, may we use the transfer feature in our financial system rather than write a check? If you go to the manual, it does list on transfer between funds a whole procedure for you to write the check and quietus it back in. That is the prescribed form for basically a manual environment, just like anything else. If your software has a way to do that and track it with an audit trail, we will not take exception if you use the function in your software. What's going to happen, or what we have seen happen on some of our audits, is we go out and there's this huge transfer adjustment that's done and there's no supporting documentation. It's not broken down with what happened. Or we might see one where you quietus it in, but you use a transfer out. So your transfers in and out don't miss. Or the reverse, you transfer it in, but you've written a check to disperse it out, but you transfer it in, so they don't match. So as long as you are able to control that, keep your funds ledger reconciled, and you can document what those transfers are, you can use your software function to do that. And I just want to point out, because I'm on my soapbox up here, transfers between funds are normally not allowed unless there is a statutory reason to do so. There are reasons that you have to do it. You know, you're moving from your MVH to your community crossings grant. You're moving money to rainy day. There are reasons to do that, but there should be specific reasons, and that's what we're going to want to see when we look at come in and ask for your some sort of report or printout on your transfers. Can the auditor's office be paid money through a grant for grant administration? This is assuming the grant budget allows for these fees. If so, how do we get these dollars? So right, if whoever is applying for your federal grant includes in there a grant administration fee and your grantor agency approves it, then that fee can be transferred to the county. But it's not going to go to a fund for the auditor. It's going to go to the county. So I'm not sure if that was in the question in there, but if you request that coming in into your grant, and the grant agreement and the grant budget allows it, you would move it to the general fund. If a local vendor owes delinquent property taxes, can payments be withheld from payments on claims against the county? Yes. You can certify to your treasurer that you have a delinquent taxpayer. They can look for, or they certify to you that you have a delinquent taxpayer. And if you go to Indiana Code 6-1.1-22-15, if the county treasurer finds that a person whose name is certified to him, so go back, you're certifying, it's kind of like with employees, you're certifying this person is owed money. I don't think it happens a lot with vendors because that's a whole lot of work, but if you happen to know you have a vendor that is behind on property taxes, this is available. You let the treasurer know this person is owed money on a contract. They can check if they can certify that that person or business specifically owes delinquent property taxes. You can then set aside whatever the delinquent property tax is out of what you owe them. Is Kleenex for employees considered a personal expense, or can the county purchase from supplies? We are going to rely on your county policy for this. It's really a local decision. For us coming in, unless it's an excessive use of it, like you're buying it by the truckload and selling it out of the back of the courthouse, we are probably not going to take exception to it. Could be a public health issue. You know, you got that box of Kleenex and that hand sanitizer on there, and you're making everyone who comes in use them. You know, it's going to be the same kind of thing that we don't take exception to buying toilet paper. Yes, it's a personal use, but really, if your county feels that strongly about it and they're on a real cost-cutting budget and they say absolutely not, we will go by that policy. But that's going to come from the county. It's not going to come from us. Please instruct us on how to show the Title 4D on the grant schedule. Our examiner told me once I should never have anything in the expenditure, so I did it that way. The following year was told it was wrong. Some visual instructions would be beneficial. I have no visual instructions today. The way I understand it is supposed to work on the grant schedule, you put both the receipts and the disbursements, expenditures on that grant schedule. You're going to code it as either a reimbursement grant or a cash advance grant. If it's cash advance, then it's going to pull the expenditures when it creates the CFA. If it's a reimbursement, it's going to pull the receipts. The macro does that for you as long as you've coded it properly and you have both sets of numbers there. For 4D, the reimbursements to your general fund, that's a reimbursement grant. Your incentives is actually an advance grant. So you put them on separate lines and check appropriately for those. There is some information, and when I get in the bulletin, I'll go ahead and put that out. Was information in the bulletin on this, and I'll make sure it's in there. And again, there is your written documentation from us how you're supposed to do that. Okay. If a debt fund still has a cash balance, but the debt or bond is paid off, what happens to that cash balance? And I want to be specific on this. If you have unused proceeds from a debt, there is specific statute on what to do with that. I'm assuming this is actually the debt service fund that has a balance after the bond or debt is paid off. And so you would go to Indiana Code 36-1-8-5, which states in part this applies to all funds raised by a general or special tax levy. Your debt service would have been a tax levy. Whenever the purpose of the tax levy have been fulfilled, and an unused and unencumbered balance remains in the fund, the fiscal body of the political subdivision shall order the balance of that fund to be transferred as follows. Unless a statute provides that it be transferred otherwise, it goes to the general fund or the rainy day fund. One of our members of the county council continues to question whether or not the council and commissioners should be offered insurance and PERF. Currently they are offered insurance but not PERF. This question stems from the idea that they are part-time. My understanding is that since elected officials are not required to turn in a timesheet, they wouldn't be considered part-time. They are concerned that if we are audited by the Department of Labor or IRS, we would be fined for violations of the Affordable Care Act guidelines for offering health insurance to council and commissioners, but not the other part-time employees. My concern is that they are offered insurance but not PERF. Could you offer anything to either of these arguments? The commissioners and the council are elected officials. They're not part-time, they're elected officials. Just like you, they're elected 24/7 for their term. They are not restricted or required to put any set number of hours in or out, just like you guys don't have to, although you probably live at your offices most of the time, but you don't have to have set hours. Your office has to be open set hours, but you don't have to be in it set hours. So when your county entered into agreement with PERF, that would be a county decision, who you're going to cover, and you enter into that agreement. So look at that agreement or contact PERF if you have questions about whether or not they can be considered in that. You should also have a policy on who receives any benefits. As far as the Affordable Health Care Act or the IRS requirements, I can't answer for them. I don't know if it would be a violation, what they're talking about, if the commissioners have insurance and your part-time employees don't. I don't know how they would deal with that. So you would need to contact the Federal Department of Labor or Department of Labor. I don't think the IRS is going to have an answer on, but the Department of Labor on that. I'm having the worst time with this laptop. Question, what does LIT stand for? LIT stands for Local Income Tax. It used to be Lowit, COIT, CAGIT, CEDIT. Those were all the local option income tax. And then last year when they streamlined it, they took the option out because all 92 counties have it. It is now local income tax. They recodified it. There is, instead of 3.5, a lot of it is in 3.6. A lot of it stayed the same. They just moved it around a little bit. But when we say LIT, which we weren't going to do, but we are, it is local income tax. Question, how long does the treasurer have to receipt in money received by EFT? In one case, it has taken over 5 weeks, and currently we are waiting on CVET money that was deposited on May 2nd. Our process is that the treasurer will write a receipt and deliver to the auditor, and we will then quietus and distribute. The offices have to work together, and you've got to get this worked out. I mean, it's kind of ironic because if I'm at the treasurer's conference, they're going, we get this money in the bank and the auditor won't quietus it in. And you're like, you guys got to work together on this. If it's hitting their bank, they should want that on their cash book, and they should want that quietus in as soon as possible. We can't say, you know, if you don't do it daily, or, you know, we would recommend daily, but, you know, there's no statute or uniform compliance guideline that says it has to be done by this date. What we do say is that all documents and entries to records should be done in a timely manner to ensure that accurate financial information is available to allow the governmental unit to make informed management decisions and to help ensure compliance with Indiana Code 5-15-1-1, commonly referred to as the Public Records Law. So we're going to look at that. Are we going to write you up because it took 3 days to do it? Probably not. Are we going to write you up because one receipt was, you know, one EFT wasn't quietused in for 5 weeks? Probably not. But if we see a consistent pattern, then it's going to probably be a finding on both offices that you don't have any controls in place to make sure that that is done in a timely manner. Our county highway is looking to build a new building. With our county instituting the wheel tax, a good portion of the expense have been moved, freeing up more money in MVH. Can MVH money be used towards a new building? This is kind of a complicated question because of the new road funding, so I'm going to try to address it. If you go to the current statute in MVH, which is in 8-14-1-4 about the permissible uses of the funds, it states that it is the purchase, rental, and repair of highway equipment, painting of bridges, and acquisition of grounds for erection and construction of storage buildings, acquisition of rights-of-way, and the purchase of fuel oil and supplies necessary to the performance of construction, reconstruction, and maintenance of highways shall be paid out of the highway account of the various counties. But remember, in new legislation, they're increasing the amount of MVH that you are going to receive in local road and street, but with MVH. And the legislators are looking to see, because they put in the statute, 50% of your expenses from MVH have got to be done on the roads. So if the building is taking up more than 50% of your expenses for that year, you're going to have a problem. So just keep that in mind. It is allowable, but make sure you're meeting that 50% threshold on your MVH going on the roads themselves. Okay, retention records. How long must the auditor keep drainage assessment information? Obviously, we did look this up, and we have some of the same problems you do. Record retention is governed by the Indiana Archives and Record Administration, which used to be the Record Commission, and they do have a website on the state government, so in.gov/IARA. That is what we're going to refer you to. They do work with us on some of this. If the record is not in there, which there's nothing specifically on assessment records, then you can call their office at the state and ask for clarification on this. But remember, for any public records, you cannot destroy them until you have permission to do so. Even if it's on the retention schedule and you've kept it the required amount of time, you still have to send in a form that says, we're going to destroy these. It goes through your local record commission and it goes through the state. And if they don't object, then you can go ahead and destroy them. But so you can't, even if we would say it's probably 5 years or after the audit's completed, that doesn't mean that on 5 years, 1 day, you can go shred all of them. So just keep that in mind. And if you have questions and it does not show up in a specific retention schedule, call their office and ask. A lot of times they'll contact us, we'll get together and try to work out and add these forms if they're getting a lot of questions on them. The treasurer, recorder, clerk, and sheriff submit monthly reports to the auditor. What should be done with them? Do they need to be reported or uploaded somewhere? Okay, we're not really sure which reports you're getting, so this is kind of a general answer. If this was your question and this isn't, our answer isn't answering it, be sure to contact Shannon or I. If you are inquiring about the monthly record of collections or report of collections from outside offices, that is the detail at the office collections, and they're telling you where to post, what funds to post these collections, these revenues to. You need to retain the source documentation in compliance with the records retention requirements. That'll be part of the receipting process. It is the duty of the auditor to determine the proper fund and/or account to be credited in each instance, and to show on each such instrument the source of the receipt and the name of the fund and/or account. So reports of fees collected and other documents supporting receipts must be preserved by the auditor, again, as part of the receipting process, records of the office. If that is not the report that you're getting, like I said, let me know and we can look into that. But, yes? The report of collection? It has to be retained for audit, but I'll look into that. It shouldn't. I mean, it's not something you have to send to us, and you don't have to upload it on Gateway. Yeah, but it's not a form we need. It's not a form you would send to us, but you would have to retain it for audit. Oh, okay. I will look into that and see if I can find where, actually pull up the prescribed form and see what it says on it. How can I save the federal grants that I have entered into Gateway when I am timed out or sign out to complete it later? Susan did call over to our IT people that support the Gateway. They point out there is a user guide on it, so be sure to read that if you have questions specifically. And within that guide, it does state you are to fill out each row as completely as possible. However, the only required cells are the ones that have the word required in the cell. Nothing in the row will save if a required cell is left blank or one or more cells generate a format error. So you want to enter a 0 in any dollar amount cells that are not applicable to the grant. I would suggest, and I am not the best technology person, so please bear that in mind, I would suggest when you pull it up, if you know it's going to take you a while to load it in, just go put zeros and everything, and then you can save it and come in and change those zeros to something else. Because if it times you out, it's going to wipe out everything you've had up to that point. And that is a pain. I understand that. I would not like that either. And I know, I have worked on spreadsheets where I've spent 4 or 5 hours, Jeff probably has too, and then Excel stops working and you lose all your data and you've lost a half a day's of work, and there is nothing more frustrating. It is awful, so I feel your pain on that. Maybe we work with the IBRC for the technology support for the Gateway, and so we have a contract with them, but a lot of the functionality, we depend on them for that. So we will give this, have them look into this, but I can't guarantee what they'll be able to do with it. Are copies of receipts for meals acceptable for reimbursement, or should we request original receipts? Okay, so from the Accounting and Uniform Compliance Guideline, which is, again, as I said, the manual, it's the Uniform Compliance Guideline. Chapter 1, which is now the same in all of our manuals. All claims, invoices, receipts, accounts payable, vouchers, including those presented to the governing body for approval in accordance with IC 51110, should contain adequate detailed documentation. All claims, invoices, receipts, and accounts payable regarding reimbursement for meals and expenses for individuals must have specific, detailed information of the names of all individuals for which amounts are claimed, including the nature, name, and purpose of the business meeting to enable the governing body to authorize payment. Payments which do not have proper itemization showing the business nature of the claim may be the personal obligation of the responsible official, employee, or other person for whom the claim is made. We will not take audit exception for the copies of original receipts that contain the proper information. However, the original receipt should be available, and someone should question the validity, the page down, of the copied receipts. Okay. This is really an internal control thing. We are not going to, if you have a copy of the receipt and it has sufficient information to support the claim, we're not going to write that as a finding because it's not the original, that's what it's telling you, but also you need to have internal controls in place because the risk that you have to look at, that you have to identify with a copy, where is that original and what is going to happen to it? And I have personally done audits where it has been submitted twice and paid twice, the original and the copy, a couple of months apart. It may not even have been on purpose. They just find it in their drawer like, oh, I didn't get this turned in, and they turn it in. So you need controls in place to make sure that doesn't happen, whether that's requiring the original or having them verify that the original was destroyed, or being able to, if your software is sophisticated enough to be able to pull out that exact payment was issued to that person 2 months ago and you need to look at it, something in place for that, because we will have a finding if we find that somebody got paid twice, they're going to have to pay it back. Would it be considered a conflict of interest for the county attorney to also be a public defender? This is not something you're ever going to have a finding on during an audit. I will check. I'm not an attorney, so I don't know what the rules of conduct are for attorneys and whether they're, I know there are laws about, professional conduct and when they can represent somebody and when they need to get someone else to do it. So I'm thinking in things like that. If the defendant that they're the public defender for, sprayed graffiti all over the courthouse, I think there could be an issue there, but it's not going to be an IDA finding. So if I can find anything out from our legal staff, I'll let you know on that. Appropriation required by the county council. Could we do appropriations for these funds at the January council meeting for the entire year? I'm assuming you're talking about appropriations that don't go into your budget order, that do not require DLGF approval. And yes, as long as you're following the procedures for appropriations, you can do those funds for the whole year. In fact, that is probably the preferred method if you know what it's going to be. Some things are going to be hard to do, like when your grant's on a fiscal year and your budget's on a calendar year and you don't know what that second 6 months is going to be. So in those cases, you end up doing either additional appropriations or not using all the appropriations. But whenever possible, if your department can give you an idea of what they're going to use out of those funds, do the appropriation at the beginning of the year. It'll save you time later. And somebody asked me, and I wrote down the question, I didn't write who it was, so I'll throw this out here. If you go to our April 2010 bulletin, there's a list of some of the disbursements that can be made without appropriation, as well as a list of some of the common funds that require council-only approval for appropriations. So if that list is there. It's not exhaustive, but it does give you some good guidelines. Can a highway transfer money from supplies, which would be 202 to 203 with council approval. If it's within a departmental budget, and it's within the department, if it's going from one line item to another within the same major budget classification, that can be approved by the council, or if you have a policy, the auditor can do it, if you've already approved that. If it's between classifications within a budget, a departmental budget, the council approves it. If it's between departments, then it's got to be a matter of reducing the appropriation in one and getting an additional appropriation in the other, and that does require DLGF approval. Does the drug-free fund have to be appropriated? There is an article in the county bulletin, which again is the Uniform Compliance Guideline from July 2015. The county auditor shall administer the drug-free community fund, which requires local appropriation. The fund is non-reverting. Okay, the county has ditch technicians, I've never heard of that before, to repair county legal drains. They are paid their wages from the maintenance funds collected in each watershed they do work in. Materials used to make repairs are also paid from the maintenance funds within that system. The county has a farm and are asking our technicians to make some private tile repairs. Those are not legal county tiles, and there's no line item to reimburse the tech. Should the commissioners pay out of their funds, or what line item should we take the monies out of? They also own a piece of private property to which they rent out to a farmer. There is a broken tile on that property, which is not a legal county tile. The commissioners are asking the surveyor's office to fix the private tile and take it out of the drainage maintenance, or labor, rod, and chain. And again, I don't know if that's a line item or a fund that the county set up. Since it is not a legal title, we can't bill it through the drainage maintenance. That is correct. Can it legally be to labor, rod, and chain, or should the commissioners, oh, page down, it's not working, hire a private contractor and pay for it out of their funds? We are not going to take exception if you use your in-house to do those repairs, but if it is if it is county-owned property, not private property, county-owned property, but you cannot use your drainage funds to pay for the maintenance on the county property, it would have to come out of the commissioner's budget. You are assessing those property owners for that particular watershed, those particular drains that improve their property. You cannot assess it and then use it somewhere else. You should not be using your own people to work on any private property. There is a provision for on roads, which if you have a question about that, there is a statute on that, on how to bill that if you do any private road work to get your money back. But as far as the drains, you should not be working on anyone's private drains. They should be hiring their own contractors and working on their own drains. I lost the question. Do townships turn in paperwork to us on their annual reports? There was a lot of questions on advertising, which I'm going to try to put something together on that, but I did not do it last night. And this kind of goes in with it. When Gateway came up, we had the 100R, which you can put on Gateway. The annual report you have to put on Gateway, but they didn't change some of the legislation that there are statutes that say that information still has to be advertised. Putting on Gateway is not advertising. Now, hopefully in the future, they'll be able to pull those together, and that may be considered advertising. But until they change the statute, there is a separate statute, and I can get it for you, that says that you do have to advertise your annual report and your employees' wages, even though you've posted it on Gateway. Trustees have the same thing. Even though they're putting all of their information on Gateway now, their statute still says they have to bring in a copy of their annual report and a copy of their vouchers and file it in the auditor's office, and that is for public records request. As you know, it is sometimes hard to get a hold of the trustee, especially for the smaller ones, and so the county is a central location for them to be able to come in. You just have to store it, make it available to the public if they ask. But yes, they're still bringing it into you, and they are by statute have to do that. A town clerk is managing an interdiction grant, and the county is receiving reimbursement of wages paid to a sheriff's officer who is participating in the program. Do we track this as a federal grant? No, the county isn't receiving a federal grant. They're getting reimbursed for their sheriff deputies' wages. So it is going to go back into the fund, probably the general fund or maybe public safety, that paid that deputy's wages. It's not a grant, even though the source of the money is federal. There's a difference between getting a grant for you to do a program, which is what the city or town is doing. They've got a grant, and they're managing that grant, and whatever an interdiction grant allows them to do, that's what they're doing. It includes wages to, obviously, police officers and sheriff deputies. But they're just reimbursing you for that. That is not a federal, you're not a subrecipient of that grant. You're an end user of it because it's the wages for your employee. Do only court claims have to be published or advertised, or all claims? Okay. The statute only it used to require all claims had to be advertised. That was changed, I think back in 2009. And now it only requires court claims to be advertised. That is the statute. Your court claims have to be advertised. What we have taken as an audit position is if the court is not, the judge is not approving those court claims themselves, and they are just running it through your accounts payable process, and it's going to your commissioners, and your commissioners are doing the final approval, we will not take exception to those not being advertised. Technically they should be, but we're not going to take exception. What you're going to run into, and you have to be careful of, is the judge decides, I want to approve this claim because the commissioners won't. They have the right to approve their own claims. If they choose to do that, they have to be advertised. Is that clearer? I know it doesn't solve all your problems, but